NIO stock hit an all-time high on January 11th when it traded at $66.99 at one point throughout the day. The stock is down around 58% from its all-time high at the time of writing. So why is this happening? Why is NIO not moving? Curious to know? Watch till the end to find out. Before that, don't forget to hit the like button, and if you're new to our channel, you're welcome to our family. NIO has clearly had a tough year, with COVID-19 shutdowns, supply chain issues, and a slowdown in its new product cycle that has allowed competitors to gain pace. NIO has dropped over 19% in the last month, underperforming the S&P 500, which has been relatively steady. The drop comes after the company's lower-than-expected Q4 delivery guidance and broader selling pressure in US-listed Chinese stocks after Didi Chuxing announced its intention to delist from the NYSE less than 6 months after going public, citing regulatory pressures in both the United States and China. That pause will shortly come to an end. NIO will start selling its much-anticipated ET7 car in March, followed by the one-size-down ET5, which was unveiled on Saturday, in September. Meanwhile, its order books are healthy, customer satisfaction is high, and there are hints that the worst of the supply chain issues may be behind it. The long-term picture for NIO, on the other hand, hasn't changed much in our opinion, and the current challenges appear to be relatively temporary. The demand for electric vehicles in China is still robust, and NIO plans to increase manufacturing capacity at its Hefei facility to 240,000 vehicles per year by the first half of 2022. The company is also growing its product line with the ET7, the company's first sedan, set to be on sale in the first quarter of next year, and 2 more models in the works for 2022. NIO should be able to grow steadily in the next years as a result of this. Is NIO stock poised to rise more as a result of expansion plans and Tesla's large order? While the stock suffered considerable losses in September as a result of China's Evergrande debt issue and fears about rising bond yields, it has since recovered due to a number of factors. To begin, NIO announced that it would increase the capacity of its plant in Hefei, China, from 120,000 to 240,000 vehicles per year, with the expansion expected to be finished in the first half of 2022. In fact, the corporation claims that with additional operational shifts, the factory could produce up to 300,000 automobiles per year. This should help the company to meet the growing demand for electric vehicles. Second, NIO's electric vehicle competitor Tesla reported strong third-quarter profitability and landed a 100,000 vehicle contract from Hertz, a large rental car company. This looks to have improved mood in the electric vehicle industry. Is NIO stock on the rise now? According to our machine learning study of stock price movements over the previous 3 years, NIO stock has a 60% chance of rising in the coming month, 21 trading days. Year-to-date performance of NIO stock. This graph shows YTD performance of the NIO stock as of December 2nd, 21. Until the beginning of H2 21, the performance of NIO stock was very similar to that of its Chinese pure-play NEV counterparts. The stocks of Li Auto and XPeng thereafter made a strong comeback to positive territory. NIO stock, on the other hand, has continued to struggle since then, and it is currently trading in the red. Its YTD return of negative 23.8% is currently trailing Li's stocks 18% and XPeng stock 16.8%. The company recently completed its $2 billion initial public offering. We believe it eliminates the obstacles that could have stifled the stock's ascent due to concerns about dilution and execution. As a result, we expect NIO stock to make up for lost territory against its peers in the near future. NIO is a significant NEV player in China with a presence in the world's largest EV market. Furthermore, as we'll see below, the Chinese market opportunity is still in its infancy. In 2020, China sold 1.37 million NEVs. According to China EV100, the amount is predicted to reach 3.3 million this year. It's a whopping 141% increase year over year. Notably, China's NEV sales are predicted to increase substantially in the future. It's expected to grow at a CAGR of 44.1% between now and 2025 and 29.7% between now and 2030. As a result, it's evident that NIO is still in the early stages of capitalizing on its market position as one of China's major NEV manufacturers. NIO has confidently rebounded from October's abnormally weak delivery, as readers can see. In a previous piece, we also noted that October's weakness was primarily due to manufacturing line adjustments to accommodate ET7's output. We also showed that investors should give NIO credit for its Q4 delivery forecast. The flat QoQ cadence should not be the focus of investors. NIO, on the other hand, outperformed our predictions in November, delivering 10.88 thousand units. It demonstrates that the company's delivery cadence has returned to normal, putting October's weaknesses behind it. Despite this, XPeng has surpassed NIO as China's leading pure-play NEV player in terms of year-to-date deliveries. NIO has 80.94 thousand year-to-date deliveries, which is slightly less than XPeng's 82.16 thousand. Both players, however, are ahead of Li Auto, which has delivered 76.4 thousand units so far this year. Is it enough to convince you to buy it? Several Wall Street analysts believe that this is the case. NIO is anticipated to launch 3 new cars and tweak 3 existing vehicles next year, according to Citi Analysis' Jeff Chung, putting it in a position to reclaim market share lost to newer models from rivals such as XPeng, Li Auto, and Tesla. He kept NIO stock at a buy rating and a $87 price target from his bank. Although NIO stock trades at a high 12 times consensus 2021 revenues, it should swiftly catch up to this valuation. According to consensus projections, sales will more than double this year and will expand at a rate of more than 65% in 2022. The company has a number of new products coming out in 2022, including its first car, the ET7, which will have a range of roughly 1,000 kilometers, or 621 miles. Looking forward, EV companies should grow bigger and stronger. We have too many EV firms on the market right now. The firms are mostly small and scattered. The role of the market should be fully utilized, and we encourage merger and restructuring efforts in the EV sector to further increase market concentration, from Kaizen article. Demand should keep up in the long run since the Chinese government intends for new energy cars that do not run on gasoline to account for roughly 20% of all new car sales from 2025 onwards. NIO's early mover advantage in the Chinese luxury EV market, as well as its investments in charging stations and related infrastructure, should offer it a competitive advantage as the market matures. NIO is likewise on track to become more profitable in the future. Gross margins increased from roughly 8% in the second quarter of 2020 to around 19% in the second quarter of 2021. As revenue grows, NIO's bottom line should benefit as well. So guys, what do you think? Will there be any change? Do let us know in the comments. Alright, that's it guys. I hope you enjoyed today's video, but do keep in mind that this is not financial advice, and we don't recommend buying or selling tokens. Do consider this for educational purposes, and do consider taking time to research. Hey, I'll see you guys later.